$1.5 trillion needs to be refinanced with commercial real estate before 2025. That's significant. Why? Because we know that rates have gone through the roof, and commercial rates are at least 1 full percentage point higher than that what you can get on a residential mortgage. So with that being said, if you own that standalone commercial property, that strip center, and or that multifamily building with 60 units, right? You might be, into an interest rate of 4 or 5%, The problem with that is in commercial real estate, large in part, these are all 5-year notes that balloon, okay? So when the notes balloon, either you pay it off in full, which most people say, I don't have $1, $2, $10 million to pay off the note, right? So now you have to refinance to whatever the prevailing rate is. Well, if interest rates, let's just say on residential mortgage right now is 7%, you're at least 8% right now on a commercial deal. These margins have gotten extremely thin. When you talk about capitalization rates, that's net operating expenses, right? Minus total rents, kind of give you a capitalization rate. These capitalization rates have got extremely skinny over the past several years because there's been such cheap money flowing into the market that investors would go ahead and, grab as much as they could and buy commercial real estate deals that might have net them out, definitely a positive cash return, but only on a very narrow percentage, right? It used to be, 10% caps is what everybody was looking for. On multifamily, you might be looking to get maybe 3 or 4%. So check this out. If you were at 4% for the last 4 to 5 years, and now you have to refinance at 8%, 8.25%, 8.5%, that's going to make your property go from a positive asset to a negative cash flowing asset. And that's huge. So the article behind me references $1.5 trillion that needs to be refinanced before 2025. Now, that is truly significant because most of these people are going to be in negative equity situations, right? Especially large in part that statistically 25+% of the nation's office inventory right now is vacant due to coming off of the pandemic. These are people that all have learned a way to work remote and from home. And guess what? Large in part, they're never coming back into the workplace, right? So office has a huge issue. There are certainly some other commercial sectors like industrial and maybe to a certain extent retail that might perform better than some others. But while commercial real estate is definitely different than residential real estate, you understand how if commercial real estate gets a cold, that's going to definitely have an eventual impact on the residential market as well. As you're looking and you're watching this video and you're in, commercial real estate, or you have friends, family, some of your sphere of influences in commercial real estate, I would tell you this is a perfect opportunity to get people off the fence and to get them to position their properties onto the market for sale today, because what's around the corner is going to be some very difficult times ahead, I believe. Just like we experienced back in 2008 with people that their assets were underwater, people are going to say, you know what, bank, it's your problem, right? And they're going to mail the keys in and do all of the same stuff that we saw before. So whether or not they were in a positive equity position or not, now they will go from positive cash flow analysis to negative cash flow analysis. And look, when you refinance, once again, this is not like a 30-year amortization. These are 5-year notes that balloon that follow a 20 or a 25-year amortization. So the monthly payments are significantly higher, right? And when it balloons, like I said, you're just at the prevailing rate. And the prevailing rate right now for a commercial real estate loan, every bit of 8%. So if you were at 4 and now you have to go to 8, let me tell you, it's going to be very toxic, and it's something that you should definitely be looking out for.